No problem.
Hello, viewers. Welcome to the Impact Podcast with Taiwo Balogo today. Yes, this is another special edition that I am super excited to have everyone
No problem.
connecting. Hello, viewers.
Yes,
Welcome to the Impact Podcast with Taiwo Balogo.
You
Cannot. Oh, sorry for the feedback. So I hope you are ready. You are ready. I want you to sit back to learn a lot from my guest today because my guest is a professional. In fact, you need to learn from this man. He is a strategic leadership consultant and also a licensed financial professional. So what you will be learning tonight are how Africans are building wealth in the United States of America. So if you are connected, I want you to please do not allow anyone to disturb you. Don't allow any device apart from the device where you'll be watching this broadcast tonight. Don't allow anything to disturb you. Don't allow anything to take you away from this telecast. And also, if you have someone that you think can benefit from this powerful masterclass, I call it masterclass investment masterclass series, please invite that person right now. Share this link, the link to this video with that person right now, because in fact, what you will be learning today are going to be mind-blowing and eye-openers. So I want you to sit back to the end of this masterclass as I invite my guest. So I want you to join me in welcoming Dr. Fola Ogun Yinka. Join me in welcoming Dr. Fola. Welcome, sir.
Thank you so much, my brother. Thank you so much. And it's a pleasure to be on your podcast today. Thank you, viewers. It's nice to be in your space. Thank you for the privilege of your time. I really look forward to an exciting time today.
Yes, sir. We are also super happy, super excited to have you live on this show. I know you are a very busy person, and we've been on this invite for some months now. You're traveling back and forth from one program, from one nation to another, but I am super happy to have you live today. So without wasting our time tonight, like I told you, or wherever you are connected from, maybe you are in Nigeria, in the UK, in America. Right now, we are still in the afternoon in Texas. I believe Doctor is also in afternoon. Yes, sir.
In
So
Philadelphia.
Thank you so much. So today, we are looking at how Africans are building wealth in the United States of America, irrespective of who the president of the United States of America is. See, there is an opportunity for someone who will run with the information that will be shared tonight. So let me allow our guest to do one of the things that he knows best to do. So, Doctor, you have the digital podium, sir.
All right. Thank you so much. And it's a privilege again to be in your space. So before I go on, just let me a little bit about myself. Like, I've been introduced by our host. I am Dr. Fola Ogunyinka, licensed financial professional. I'm licensed in Pennsylvania, Maryland, Missouri, Georgia, Florida, Indiana, Texas, California, and Virginia. We're still counting.
Wow.
Yeah. And all right. And also Illinois, that's there. Okay. So a bit about myself. I've been married for over 26 years to my college sweetheart. We met at the Obafemi Awolowo University in Nigeria, and she is also a licensed financial professional, and an accomplished author. In fact, we got our green card through her exemplary, profession as an author.
Wow.
She stood as an award-winning author, and then we're now citizens of the United States based on her grade, where she's written over 50 books to her credit.
Wow, I tap into grace, sir.
That's Grace. Yeah, that's awesome, Grace. Yeah.
Yes.
So, and again, also my doctorate is in strategic leadership with focus in strategic foresight. I have a consultancy outfit called Lead Attitudes Consults, and currently I serve as the Quality Assurance and Training Director, Catholic Community Services. So that's a brief about myself. So yeah. To the subject matter today, I don't want to keep you for too long. We're going to be looking at strategic insights for improving your future. And another way to coin it is financial miseducation of the middle class, how to solve it. It's interesting to know that, 95% of Americans end up poor. And the issue is that I'm sure you've heard this before, that America is an information-driven society.
Yes, sir.
So there are certain information. People are not really poor as that they lack funds in their accounts. They are poor because they lack ideas, winning and strategic ideas. And what I'm about to share you is an idea that a lot of Africans in America here have caught, and it's revolutionizing their life. In fact, I know a lot of Africans that have become millionaires in the United States based on this information I'm about to share with you. In fact, I know someone whose net revenue in a year is $9 million.
In dollars, $9 million.
In dollars, not rands, not naira, not kwacha, $9 million.
Dollars, as in the
That's
S
right.
with a sign.
Yeah, or with a sign. Yeah, exactly. The green one.
Thank you, sir.
Yeah, so let's go on. So the group that we represent is called World Financial Group. Is part of Aegon. Aegon is a global financial service organization in over 20 countries and runs by the name Transamerica United States. Its total asset as of December 2017 is $475 billion, and that is amazing. And it's interesting for us to know that the financial industry, the financial service industry, nets in a year in the United States, nets in about $109 trillion. The retail industry, the big names like Walmart, like Amazon, like Costco, and all those retail, they only account for 23 trillion. That's the total revenue. And then for the real estate business, about 34 trillion. But financial service accounts for 109 trillion. That's greater than retail and the real estate put together.
Yes,
but okay, let's move on. So these are kind of the kind of companies we deal with in the financial service industry: Pacific Life, Transamerica, Aegon. I just mentioned America Funds, and so on. All right, so let me just jump that. Okay, now to the very core information, to the strategic information. There are certain principles that make people principals. Before you can be a principal in finances, you need to understand basic principles. And these principles, as I would begin to share with us, are, they're applicable globally. Of course, you have to tweak it depending on the kind of system every nation runs, but this is peculiar to America here. Financial principles of successful people. First is that they make money but never lose money. I didn't say they make money. Many of us focus more on just making money, but we focus a little bit, we don't on losing money, because we feel that the more money we make, the richer we become. That's not entirely true. Those who are truly financially successful make sure they make money and they never lose money. The second rule is that they never forget rule number one. And who said that? It's a name you might know. His name is called Warren Buffett. He's a billionaire, And he said, never lose money, never forget rule number one. I mean, if you want to learn from people who have a story, who have evidence. This man has evidence of what he does, so you can't joke with it. The third principle is that they avoid management fees. They don't pay for someone to manage their financial portfolios. That's important. They avoid it. Remember, I said they make money, they never lose money. They believe that paying someone to manage their financial portfolio is losing money. I'm going to express it on that later. They also make sure that whatever they make always beats inflation rate. In the United States, averagely in a year, inflation is put at 3% per annum. So they make sure that whatever they make in profit must exceed 3%. All right. Again, they avoid double taxation. Now, it's a big thing in the developed world. Taxation is a big thing. It's, in almost the Western world, but in America, the financially successful people, they know that the tax system is very cunning and may cause you to be taxed a second time. So they avoid double taxation. Many people have money in certain portfolios that, number one, you get your salary, it is taxed before you can get it, and you take that money, put it in another financial portfolio, and then it's taxed again. That is what financial successful people don't do. They avoid double taxation. Again, flexibility. They ensure they have access to their funds. Remember, another way to talk about finance or money is liquid. Money must be liquid, must flow. So the truly successful people know that for them to be truly wealthy, they must be able to access their money. Flexible. Another thing is that they leverage on compound interest. They know that simple interest cannot work for them. So they look for financial portfolios that guarantee compound interest returns. Another principle is that they avoid Social Security. Now, this is applicable in the United States. A lot of financial portfolios, you will get Social Security tax because the government is looking for every way to secure the future of old people, how they will take care of the old when they can't work again. So that's why they collect Social Security tax, so that people who are incapable of working can be taken care by the government. And so every financial portfolio that the government, they are like hawks. They want to take that Social Security tax to guarantee the future. But financially successful people said, oh, you've already taken one tax from me. I may not even need your Social Security. So why do you want to take money extra from my own funds? So the financial society will look for portfolios to put their funds that will avoid Social Security tax. All right. And then again, they protect themselves from chronic and critical illness because they understand that the number one cause of poverty in North America is critical or chronic illness. They know it. Of course, when our bodies cannot function, we can't go to work again. And that can cripple an entire life, sometimes an entire household. They avoid that. Then again, they avoid the probate court. The probate court is a court set to take care of the estate of the deceased. Interestingly, in this country, America, what happens is that when a person dies, now we must understand that America is a very credit-driven system. A lot of things is driven by credit. Everything is credit. Car loan, house, phone, credit, airline. You can get air tickets, credit on credit on credit. And so now when the person dies, how do the creditors get their money back? Through the probate court. So when a person dies, what the probate court does, it locks up the money of the person and ensures that they check everywhere the person has assets so that they take the assets and pay the creditors first before they take if there's anything remaining, before they pass it to the benefactors or the beneficiaries of the person. That's what the probate court is all about. But you know what? Financial success people have found a way around the probate court and keep their money in portfolios that avoid the probate court. All right. Now, look at financial portfolios. Here in America, we have checking account. you have the savings account, you have certificate of deposit, you have 401k. These are independent retirement accounts, 401k, 403b, you have the IRAs, you have the Roth IRAs, you have stocks and Bitcoins, you have annuities, you have life insurance, you have bonds, college funds, social security benefits, pensions, and then what we Africans know as Osusu, where I come from, some Ngaji, some Wamu, some Chama, depending on which part of Africa you come from. All right. So, but today, for the sake of today's podcast, I'm going to focus only on the first 11. The 12, I'm not going to talk about because you have little or no control over it. It's controlled by the government. Pension also, it's controlled by your place of work. You can't, and then so it's not really what we should discuss about. It's not that you don't grow your money by putting your money there. All right. So let's go to the next profile. Okay. We're going to compare those principles I shared with you vis-a-vis these portfolios, these 11 portfolios. So look at it. On this screen, it says, make money, never lose money. Out of all these portfolios, checking account passes it. You make money, you don't lose money. Yeah, in most checking accounts, even though some checking accounts, you lose money because they take management fees. But generally, checking account, especially if it's in all these credit union banks, they don't take money from you. So you're making your money, it's there, safe. Their savings account, the same thing, certificate deposit, the same thing. But 401k, because it's a variable account, it reflects the stock market. Sometimes you're making, sometimes you're losing. The same thing with IRA, the same thing with Roth IRA and 401k Roth. The stocks and Bitcoins, the same thing. But look at it, indexed annuity, life insurance, municipal bonds, they pass the test. Those accounts, you make money, don't lose money. College fund is also a variable account, especially the 529 college fund is a variable account. And some of you are saying, oh, I didn't know. Yeah, that's what some people put money. You're planning for your child's education, not knowing that you have exposed your investment to variableness. So if the market doesn't do well, it loses. Let's say it's the time you need the money for your child's education and the stock market does badly. What has happened? You have lost money. And it's not the place to put your funds. All right, especially planning long-term for your kids. All right. Second principle, paying financial advisors. Checking accounts, you don't pay. Savings account, you don't pay. Certificate deposit, you don't pay. 401k, yes, you pay 2% management fees. 401k, 457, 403b, you do pay that. Independent retirement account, you pay management fees. Stocks and Bitcoins, all of them, you pay management fees. But again, look, index annuities, life insurance, you don't pay. Municipal bonds, you don't pay. College fund, again, remember, it's a variable account, you pay. Anything variable. See, the painful thing about this management fees is that whether your investment is making money or not, you still have to pay. Can you imagine? So if I'm losing, why should I pay somebody who is mismanaging my money? That's what the world, they don't do. They don't, no matter how small it is, they don't give money away unnecessarily. Right. Then inflation, which of this account beats inflation? Definitely not your checkings account, because most checking accounts in this state or saving in this country or saving account, maybe with 0.1% or 0.3%, they don't beat inflation rates. So also the same with certificate deposit. It's usually like 1.2%, 2.1% in the max. It's not up to 3%. So whatever money you are keeping there, inflation is grinding it. It's eating away. So your money you're not making anything. 401k, IRA, Roth IRA, stocks and Bitcoins, it's a yellow because it's neither here nor there. When the stock market is doing great, especially over 3%, you're making money. But when it dips, what happens? So you're still losing. Remember the first principle? They make money, they never lose money. Then again, indexed annuities. You see here, it beats inflation. Life insurance beats inflation. Municipal bond beats inflation. College funds is neither here nor there because it's variable. You got it. Yeah. Then tax or no taxes on interest. Do you see that? Again, remember, the rich avoid double taxation. Checking account, now we're getting to the time of year from January, we're going to get some documents. It's called the 1099. Banks will send it to you. What are they sending? When your small money makes it, sometimes, when I get mine, sometimes it's just a couple of dollars. I'm taxed. But even the small money I am making, oh my God, the Internal Revenue Code is a hawk in this country. Savings account, the same thing. Cyber debit, the same thing. 401k, 457, 43B, you will be taxed. IRA, you'll be taxed. Roth IRA passes it. You are not taxed now, you are taxed later. And I'll come to that later. Stocks and Bitcoins, of course, you're going to be taxed on your profit. Annuities, you will be taxed. But look at life insurance, municipal bonds, college 529. That's why people run to college 529 and say, oh, they're not going to tax it because I'm helping the government pay for my children's school fees. But remember, it's a variable account. And so, but life insurance, again, no tax. Municipal bonds, no, you avoid double taxation. All right. Now, access to cash, penalty free. Which ones can you access? Checking account, you can access your money at any time. Savings account at any time. Certificate of deposit, no, you can only access your money at the retirement period. It's fixed period. You put it for a period for 1 year, 3 years, 3 months, 6 months before you can access it. So you cannot adjust at any time. 401k, 457, 403b, you cannot access it at any time. Remember, there are a lot of laws. You access your 401k before then, you get a 10% penalty. Can you imagine? IRA, the same thing. And Roth IRA, you get penalized. Stocks and Bitcoins, you can access your cash at any time without penalty. Annuities, the same thing, you can access your cash. Life insurance also, you can access your cash. The bonds, no, municipal bonds, you cannot. College funds, you cannot, because they regimented just for college. And let's say your child is so intelligent or so blessed that maybe the government or a body gives him or her a scholarship. What happens if you don't need the money again, because you can only use for education, you have to transfer the money to your retirement account. You cannot use it. If not, you'll be penalized by government, because government will say you cannot. And so because they need to get their tax back, they have to tax you and penalize you, because remember, they have saved you not paying tax over the years. And because they know that a lot of people are going to use that avenue and siphon money from, take money that government ought to take. Government wants to get every funds they can. All right. Remember, they leverage compound interest, not simple interest. A lot of portfolios operate simple interest, but compound interest. This guy, his name is Albert Einstein. I knew him as a scientist until I began to, get into the field of financial service organizations. And I began to discover that, he wasn't just a scientific guru. He was also a financial guru. Look at what he said. Compound interest is the eighth wonder of the world. He who understands it earns it, and he who doesn't pays it. I'm going to come and explain that later, but look at this example quickly. You see here, somebody has $100,000 at 10%. This is just hypothetical case. This is not usually an account. Someone say, oh, which portfolio do you have 10%? No, this is just hypothetical, just for the sake of example. Look at simple interest. First year, second year, you begin to see the difference, $1,000. Now that may not be much, but for some people, it can mean the whole world. But look at the difference. As the year passes, compound interest works so hard on their money. Now, there's a guy called Robert Kiyosaki. Robert Kiyosaki said this: the difference between the wealthy and those who struggle is that the wealthy, those who struggle work hard to make money. But the wealthy make their money work so hard for them that it preserves the generations after them. So basic difference is that the middle class or those who struggle work for money, but the wealthy make money work hard for them. Can you see? So wealthy know that simple interest is not making your money work hard enough, but compound interest makes your money work hard. And with time, you begin to see, look at the 20th year, $372,000 difference just because of the kind of interest that is working on your money. If I were you, I know your guess is to put my money in what? A compound interest account. Look, 40 years. Can you imagine? 40 years I work in, like in the United States, there's no retirement age per se. Do you understand? So let's say I start work at the age of 25 and work for 40 years to 65 and just put 100,000 and don't add anything at 10%. Look at it. I retire a multi-millionaire, $4.5 million. That is amazing. That's if the interest is 10%. You know, that's just for hypothetical. But back to what he said. Albert Einstein says, it's the eighth wonder of the world. The compound is the eighth wonder of the world. He who understands it earns it, and he who doesn't, what does he do? He pays it. And I'm telling you, how do we pay these things? You know, many times we pay it in your car notes, your credit card. That's how we pay compound interest. Your mortgage, that's how we pay compound interest. But listen, I remember I'm telling you what Africans are doing here in America that is causing them to earn compound interest. We're coming to that gradually. All right. Again, this is a very important principle. They ensure that they put their money in a portfolio that guarantees uninterrupted compounding. Mark that word. I'm going to repeat again. They ensure that they put their money in an account that is over 3% and guarantees uninterrupted compounding. 3% while inflation rate. They must always ensure that they put their money in something that exceeds the inflation rate and is uninterrupted. Look at it. Checking account, there's no guarantee. Savings account, no guarantee. Salary deposit, no guarantee. 401k, no guarantee. IRAs, no guarantee. Roth IRAs, no guarantee. Stocks and Bitcoin, no guarantee. Fixed index annuities, guarantee. Life insurance, guarantee. Municipal bonds, no guarantee at all. It doesn't work. College funds, no guarantee. Now, I think you're beginning to zero in to know where the wealthy put their funds. All right. Provisional income and danger of social security taxation. Portfolios that avoid social security taxation. Why should I be taxed again and again? Every money I make, why does government want to take a bit of it? Uncle Sam is what the tax code is called, tax system is called. They want to come and take more. Checking account, they'll still tax me. From that small money they have added, they'll still take social security. Savings account, the same thing. Certificate deposit, the same thing. 401k is the same thing. IRAs, the same thing. Roth IRAs, no. That one is protected against social security, which is good. Stocks, no. Index annuities, no. But life insurance, you're protected from social security. Bonds, no. College funds, neither here nor there. All right, let's move on. A good question. It's a rhetorical question. You don't have to answer me, but think about this. How many days forward could you survive if you stop working today? When I joined this business, when that question was asked, it was like a slap on my face. I knew that if I did not collect 1 month's salary, things will go haywire in my life. I would be back. I'll be behind on my bills. And I knew I had to do something to get this arrested. Okay, but sometimes if it's just a few days or a month, you get back. But what if it's a chronic or critical illness that could last for 5 years and above? Will you survive? That's a tough one. Many people, their lives have been radically changed because chronic illness came, critical illness came, and they could not manage it. Remember, the number one reason why people go bankrupt in this country is chronic or critical illness. We're growing old. Yes, I'm sure people of faith are saying, I shall not die but live to declare the glory of God. I will live those are fantastic utterances. But the question is, even Jesus said, when the storm comes, the man who built on the rock was preserved. How many have a foundation for the storms of life when they come? This is an intelligent question we need to ask ourselves. How many people have foundation? When you look at these portfolios, checking account, no protection, savings, no certificate of deposit, no 401ks, 403, no IRAs, no Roth IRAs, no stocks and bitcoins, no protection, annuities. Yes, depending on which kind of annuity, life insurance, yes, bonds, no, college funds, no.
I also did the same thing. I said, let me show my face, doctor.
Yeah. Thank you. I mean,
this
it's
is
a food for
getting
thought.
interesting.
Yeah, I mean, it's a food for thought. I mean, people. I mean, I've had sad stories, of people that their lives are radically just one illness changed. Some had to lose their house, lose their cars. I mean, radically changed.
Wow. This is
It's sad.
serious.
It's serious. But
Let me continue. Let's allow you to continue this wonderful presentation, sir.
thank you, sir. So life insurance stroke living benefits. Some people say, but hey, I have disability insurance at work now. I smile when people talk about that because I work as HR, and we used to tell people, oh, those are things we flag, we have disability insurance. But disability insurance is temporary insurance. It will cover you for things like the lady on the right hand with crutches. That will keep you for maximum of 6 months. But look at the guy on the left. He's a lifesaver, he's having a chronic or critical illness 6 months afterward. I've met staff, I see in their face how they are struggling when they go to critical illness and chronic illness because they are not informed. They are not informed. And that's one thing the world, they know that sickness is not what anybody prays for. Nobody prays for it, but they make sure that if it happens, they are safe. Their standard of living will not change. What financial portfolio is that? That's what Africans, there's a campaign now. A lot of Africans are catching it on it, and their lives are radically changing. Right? These are just examples of critical illness, heart attack, cancer, the rest, and then we have, chronic illness is if you can't do eating, toileting, bathing, transferring, dressing, or continence, if you can't do two of any of those, then you're said to have a chronic illness. And if those things happen, how do you survive? How do you maintain your lifestyle? How does your rent your mortgage keep going? How does your cars, you don't need to sell your cars or let them to confiscate them. You can still send your children to school. Nothing changes, even though you are no more working or you can never work again. How do you assess that? These are insights we need to know, right? Then estate and the probate court. This is very sad. I call it the voice of the nurse and the probate court. Now, every nurse practitioner, licensed nurse practitioner in America is trained to make 5 calls when the person dies. 5 calls. 5 calls. You can verify from the licensed nurse practitioner. The first call is
sorry, sir. You mean nursing as a profession?
Yeah.
Okay.
They must make their licensed nurses must make 5 calls when a person dies.
Okay, so
that's go ahead.
So that's what you want to share with us now, sir?
Yeah, wow. Those 5 calls they have to make. The first call they make to the family of the deceased to tell the family, look, your beloved has passed, or your family has passed, your family member has passed. The second call is to the doctor. We call it the PCP, primary care physician of the patient, to say, hey, your patient has passed. The third call is not usually made, but it's made at times, is to the coroner. That's to do an autopsy, to ascertain the cause of death. Yeah. It's always good to have it in the portfolio of the deceased. Then the fourth call is to the funeral home so that they can make arrangements to take the body for burial. The fifth call, and this is the very most important call, you can't believe this, I never believed this, never, but it's there. They make it to the probate court. It's a 1-800 number. And when they make the call, they ask for what is the name of the deceased, when the deceased died, date of birth of the deceased, social security number of the deceased. Once they make that call, within 1 hour, the following accounts are frozen. And the
Oh,
person, nobody will have access to it for minimum of 6 months because they must do their work. Checking account is frozen. Savings account is frozen. Certificate of deposit is frozen. 401k frozen. IRA frozen. Roth IRA frozen. Stocks frozen. Index annuity is not frozen. Life insurance not frozen. Bonds frozen. College funds frozen. Now you know why people.
seriously?
I'm telling you, that is why people at times cannot do a funeral for their deceased. The man is rich, but nobody can access the money. And do you know what? If he has a joint or she has a joint account with their spouse, it's also frozen because wherever the social security number is attached to,
Everything.
that account is frozen.
Wow.
No,
Sir,
it
for the
is.
sake of some of our people in Nigeria, this checking account, is it the same thing as business account?
It's current account. Current account.
Okay.
Current account is what we call our current. I know in back home we call it current account. Here they call it checking account.
Okay.
Though the checking account here is a bit more versatile because they give you some small, and they can give you, depending on the bank, they give you small interest on top.
Okay.
So like that. Yeah.
Continue,
So can you imagine? All these accounts are frozen.
Wow. So you don't have access to the funds, even if
you won't have access. They have to check all your debtors will reach the probate court and say this is how much this guy is owing. Then they will administer the payment of those debts. Once they have done it, if there's a balance, they will now give it to the beneficiaries.
And that's after like 6 months or 1 year.
Minimum of 6 months. In fact, because of COVID, there was a backlog. More people died during COVID. So there's a backlog. They have not even finished that backlog now. So people are saying it's even taking more than 2 years now.
Wow. Hey,
that's right.
This is informative. Thank you so much, Doctor.
I don't know many people, whether they know they can. This is Googleable. I've forgotten the name of the man, but the owner of Cash App, one of the co-founder of Cash App, he died. They had to do GoFundMe for his funeral, even though he had millions in his account, but it was frozen.
Seriously? So if you are a startup out there and you have access to this information, you better protect yourself, because I realize that a lot of startups now are coming to Silicon Valley, especially from Africa, running their startups, getting funding from America, Silicon Valley. They have accounts in the States, and if anything happens, protect yourself. Right on, Doctor.
Please protect yourself. And if you are there, even, we're going to come to that, so that you can know that it's applicable to you now. Look at, this is just a short one. Now, if you look at this chart, you find out that there's only one out of these 11 portfolios that passes all. That is the life insurance. Life insurance. That's the only one that passes. But before I go on, there are many types of life insurance. Okay, before we talk about that, growth options of your money, it's good to know how your money should grow. Money can grow fixed, can grow variable, can also grow what? Indexed. I need to let us know this. This is very important. I've only knew before I got into financial service, I knew that money can go fixed. I understood variable because of stock market up and down, but I did not know that it was called indexed, a way that money can go, which locks your gains and ensures the person will not lose. What happens is that when the market is variable or volatile rather, it locks the gain so that you don't lose it. And when the market has started getting better, it unlocks again and you start rising. So ensures no loss. It's called index. Yes,
so that's the secret. That's the secret behind the stuff.
That is the secret.
I got it now.
Secret.
Thank you.
I got it. That's the
sir.
secret.
Seriously? Index. Let me say it the way you Americans used to say. Seriously? I just got it now.
Seriously. Yep, that's the secret.
Wow.
That's the secret. And it's powerful. Now, this is, I told you the other one was hypothetical. This actually happened. These are two portfolios. People put their money in $250,000 in 1997. And look at it. The one on the blue is a variable account, a 401k account, an independent retirement account. The other one is an index account It's called an index universal life insurance account. So see what happens. 250,000 put in, see what happens. 1998, 6.06%. The guy in the variable account made money, and it looks like he's doing well. But the guy in the universal life insurance he cannot get more than 15%. Notice that his profit is never more than 15%. So he goes on with 287, and the other guy says, I told you to come over. See, you're losing money. I'm 315, you are 287. Come on, guy, don't let them cheat you. I'm on a roller coaster. 1999, the market did well again, moved to 374. The guy is at 330. And this is what causes, this is the enticement that some people have. That's why they put their money in variable account. But look at what happened in the year 2000. Just one drop in account. One drop, minus 12.13%. These are real figures. This, you can Google it. This was S&P 500 figures for 1997 all the way to the year 2020. Okay, it dropped to 328. But the guy in the index, it locked it at 0.75%. That means no loss. It's still, some index will even say 0%. That means no. But some index, a good chunk of index will even give you a little bit. So they gave him a little bit, 0.75%. Look at it. From that year, he had 333,000, and the other guy 328. From that year, the guy in the blue never caught up with the guy in the green. Never, because one loss is enough. In the whole year, from 1998 to 2020, there was 7 years of loss out of 30 years. But even with just 7 years of loss, look at the gains. At the end of the day, 465,000 was what was made 2020. The other guy in the green column had got 1.419 million, about $1.4 million. And interestingly, the guy in the green column is still not taxed. Meanwhile, the guy in the blue column, with the fact that he struggled, is still taxed because it's not protected by the tax code 7702. This is what the wealthy know. This is what Africans are discovering, and their lives are changing. I mean, I was in Atlanta doing one of our financial splashes. I saw Africans who are earning, I saw a number of them. So a lot of Africans earning $500,000 and above in a year. This is fantastic. So what is happening here? You see that the other guy goes on 1.4 million and the other guy goes on 348 after being taxed. And you say, hey, but why, if this is the case, people should go to the index. Why are they staying in the blue? Why haven't people? Now, let me show you the reason why. Now, look at the year 2009 to 2014. There was no loss in the stock market. There was no loss. In fact, at 2009, the guy had 259. By 2014, he had 489, almost doubled his money. If you look at 2009, the guy in the green color had 595. By 2014, he had 997. So he didn't double at the same rate of the other guy. So the other guy increased more, but we have forgotten that he lost. And that's what people don't see. They only see these gains. Remember, the wealthy know that the secret to wealth is make money, never lose money. All right. I was going to explain the types of insurances. We have group life, which many people get through work, and its coverage ends when you leave work. Traditionally, we don't even count this as insurance. If you have, some people say, I've asked people, do you have life insurance? They say, yes, I have at my work. I said, that's not life insurance, because the day you leave your work, you don't have any insurance. So at the end of the day, nobody plans to say, look, as I'm working here, I want to die here. No, you want to retire and live a good life. Why do you have only group life insurance? Some offices give you to a certain limit, take it. But rather than pay, even if it's 1 cent, look for something that you can take out of your office wherever you are. And usually offices don't give you that. When you leave and you want to keep it, you pay a higher premium. because that's why it's called group life. It is cheap, very cheap. Then we have term life, and term life is temporary. It's usually 10, 15, 20, 30 years. And of course, there's no benefit to the client when alive. Generally, premiums will increase when policy terms. For instance, if you get a 30-year term life insurance and you're 30 years when you're 60, you still want to have a life insurance. When you go back, the premium will increase radically. Why? Because at 60, you're closer to the mortality rate. And so, of course, remember, insurance is about risk. So the risk is higher for them to insure you, so it goes up. Why? Again, there's no cash accumulation. You're just gambling your life, and most times there's no payout because people usually outlive their term. And they're very skilled because they know that the average death rate in America for a man is in the 70. The person is about 78, and for women is about 81. They're about recently, so they're always making sure that the term ends far from the mortality rate so that they don't bear much risk. So term life is cheap, but it doesn't really make sense. Whole life, it's a bit more appreciable. It's more expensive though. No benefit for the client while alive, no cash value guarantee, even though it does give cash value, but it's not guaranteed because it's a variable account. Depends on how the stock market is doing. So that's not where but this is where we are. This is the family miracle. We call it the family miracle. The only disadvantages is that you need to pass a health physical test. Do you understand? You need to be physically healthy. Remember, because of the component that preserves your health. And this is where the wealthy put their money. In fact, most wealthy, immediately their baby is born, 2 weeks after the baby is born, they get a policy for the baby because that's the cheapest. You can get it as cheap as $35. And can you imagine paying $35 for a $1 million policy? All the life of that baby, by the time the baby is retired, the baby is a millionaire.
You mean, sir? Sorry, I have a question.
Yes.
You mean,
go ahead.
I have two questions from what you just said now, that you need to pass a physical test.
Yes.
That is, you have to be healthy. You have to.
That's
so
right.
I want to encourage you out there. I'm a fitness enthusiast, and I'm an advocate of wellness and fitness. And I've been saying this for long. If you're a pastor, a leadership coach, or a business coach, whoever you are, you're a business person, an entrepreneur, please invest in your health, your wellness. You have to live well. You have to live well. Take note of your well-being. So you have to pass that. And if you don't pass that, that means you are not qualified for this indexed universal life insurance.
That's right.
Wow.
That's right.
Okay.
And that's the thing. Now I understand why they say health is wealth. So you won't get it. And that's why it's good to check. That's why the best time is now you're healthy. Get it. Don't know what will happen to her. Let me tell you a story.
Okay, sir.
I know someone who they told her about this idea. She was bent on it. The husband was fighting it. But you know how women are, very insistent. She said she was going to get it. She got it for herself. The husband didn't support her. She got it for herself, got it for her husband. 2 months after she got it, the husband goes for his normal annual physical and they discover he has pancreatic cancer.
Oh, seriously?
Yes. But the good news is that he had an insurance. And he did it because pancreatic cancer, it was categorized as a critical illness. He got, after just a few weeks after they got the evidence, in 2 weeks after, he got a check of 90% of the face value of the policy, even though he had only paid for 2 months.
Wow.
Was ever grateful because pancreatic, he had to be off work for over 6 months. His disability insurance will not cover that. And it will pay you just 60% of your income, assuming your expenses are more than 60%. You begin to struggle. But the guy is comfortable. He has a disability at work, has this, and he has overcome the cancer because they arrested him on time. Can you imagine? So, this is what people. Let me quickly run because I know time has spent. It's interesting that this is such a powerful secret that even banks own life insurance. The question you ask yourself is, are banks going to die? Of course not. They're not going to die. But the way the financial service is, they too are very wise. They have incorporated banks and company-owned life insurance. And what they do is that these banks, they will insure their key officers, like their CEOs, their COOs, and then they will be the policy owners, while their CEOs and CEOs and head of departments, they will be the insured. So, banks are doing that. Many organizations are doing that. You see, Bank of America, in April, Bank of America has about 23 million or thereabout, is it 32 million or so in life insurance, as it were. The same thing. You can see this book, Money, Wealth, Life Insurance. This is a book you should get by Jake Thompson. Money, Wealth, Life Insurance. It's on Amazon. Get it. It will open your eyes. A lot of things I'm sharing came from this book. Just read the book. It will illuminate you.
Thank you, sir. Yes, I want to recommend that book because I've read it through Prophet Precious.
Fantastic.
So after
very good
your presentation, he now showed me some books to read, and this was one of the first book I read, and it was an eye-opener. And I got to know from this book that this policy has been in existence for as many years as possible, but a lot of people don't know about it. And that is one of the reasons why we are doing this now. And we hope to bring Dr. On this show again and again, because I know some of you might not get it at the first presentation. So Doctor, sir.
Thank you very much. Okay, so these are companies that you may be amazed have corporation-owned life insurance. General Electric, Starbucks, CVS. These are companies, Panera Bread, Pfizer, Office Depot, Comcast, Verizon, AT&T. These are Nestle. These are companies that own corporate-owned life insurance, as it were. Now, I want to begin to zero in and close right now. The biggest banker of all, his name is called Ben Bernanke. He was the former Federal Reserve chairman. Look at what he said. He said he has majority of his liquid wealth invested in insurance products that promise guaranteed rates of return. That's what the Index Universal Life does. Why does he have more faith in the insurance industry than in the Federal Reserve Bank? He doesn't put it in certificate deposit, but he puts his monies in insurance products that promise guaranteed rates of returns. I wonder, ironically, banks are legally required to have foundation of very safe liquid asset known as Tier 1 capital. Life insurance is considered to be so safe that bank regulators allow life insurance policy owned by banks to meet their Tier 1 capital requirements. So that means banks use it as their backbone, and the Federal Reserve allows that. We need to learn.
Wow.
Where else would you learn them from your bank? And unfortunately, banks don't tell you this.
They won't, sir.
They don't. Because they're leveraging on our ignorance, and they know these things. That's their backbone.
This man, a lot of people knows him across the world, but I want to believe that some of our audience on this platform will remember 2008, before the financial meltdown, during the financial meltdown, after the financial meltdown. This was that man that held American economy strong during his tenure as the Federal Reserve Bank chairman. Is Ben Bernanke. If you're a forex trader, you will know Ben Bernanke, because we used to wait for a speech before we trade. If this man speaks, the market moves. So please, I want to believe this is a book, sir.
Yes, this is the book. Another book again, The Family Bank Strategy by David T. Phillips.
Wow. So please, we need to read this book. If you're a member or a follower of this podcast, please, one of the things I want to encourage us to do is there are secrets in books. Learn to be a good reader. And let me ask a question. You mentioned that we can also do this for a newborn baby. Is it possible?
That's right.
Seriously?
That's right. 2 weeks. You can do it so to you as the parent own the policy. The baby is insured. This is what the wealthy do. immediately their baby is born, 2 weeks, because it takes about 2 weeks to get a social security number. Once you get a social security number for that baby, you can get a life insurance for the baby. You understand?
Wow.
So that's what they do. And the only thing is that, you might not be able to get the 1 million unless you have a policy that big, because it's suspicious. Because they think that, why would you want to get a baby and you haven't insured yourself? They think that the process is that you should make your baby secure, because the baby is the beneficiary first. Then if you now have a life insurance for them, then it's justified, but you must have your own first. But you can have for a child up to 250 if you don't have a policy. You understand?
Okay, so
but 250,000 is a lot too. Get something for the baby.
So now I want to ask on behalf of, if you have question, please I can read comments here. I can see comments from Simisola. Okay, I guess that's your wife, Oguyinka. I can see Esther, Pastor Precious, Godwin Sunday. Now, some of this money that you mentioned, 250,000, 1 million, a lot of people will be thinking, do I need to drop all this money? Can you tell us more about that, sir?
No, what happens is that you get an insurance product for the child. What I'm talking about the death benefit. That means if that insured dies, the beneficiary gets 250,000 or 1 million. So you don't drop the 250,000. No, it's like a life insurance you get. But now you as the parent are the policy owner. The good thing about this is that it is not just a life insurance. It has an investment component. Do you understand? Which remember the green chart I told you of it. The returns of those investments allow you to turn it to a bank, as it were. And that's why I look forward to probably another time I will show you illustrations, where you will see, how these figures work for you and how it can become your bank. This index is so powerful that it can actually become a collateral for business investors that want to buy real estate for their business. So mortgage companies will actually tell you, if you have a life IUL, they'll say, hey, okay, you know what? We will give you this money and we'll talk to your insurance company and tell your insurance company, okay, if you don't pay back your mortgage, we can take from your IUL. They will not take it immediately. That means you don't even have to pull the money out. They will just want to see that the money is there. That's all, because they know that this thing is sure. Remember what the Federal Reserve Bank sees it as a tier 1 capital investment requirement for banks.
Wow. In fact, sir, thank you so much for this eye opener, because the other book that you recommended was where I got to know that some of these companies that we don't even know that they are into life insurance are also into life insurance, like Bank of America, AT&T, all those guys. I was like, what? Nestle?
All of them.
So these guys are not making their money from one source. So viewers, followers, members, irrespective of who you are, please begin to think. And one of the things that we'll do at the end of this program today is to give you doctor's contact so that you can reach out to him. I know you have a lot of questions that you might not want to ask on the public space, but you can reach out to him. And then I want to allow Doctor to conclude his presentation, and I will share that with us so that we can reach out whenever we want to reach out to him. So continue, sir.
Yeah, sure. So I look forward to anyone who wants to reach out, because this campaign is about, advancing the cause of our community, making sure that the financial future of those within our community is secure. All right. Now, I want to conclude with the story of a guy called Scott. This Scott, he allowed us to share a story. Yes, he's Caucasian, but his life story can happen to anyone. Scott was reached out to like this to get an index universal life insurance. He loved what he had, and he was wise. He got a sizable life insurance for himself. I think it was about 400,000 thereabout, but that's what he got for himself. Scott was he was earning about $50,000 per annum. And so one day Scott was jogging, taking care of his health, jogging in and he started to have a pain on his chest. He thought, this is not worrisome. But before he knew it, he started having shortness of breath. Well, in short, he had a heart attack. He was rushed, called 911, was taken to the hospital. And when they got to the hospital, of course, fears were confirmed. It's a heart attack. And they said they needed to do stents and all those kind of things. Of course, that meant he was going to be off work for several months, But the good thing is that Scott had a life insurance for a while. I think about roughly a bit over a year. So he called his agent and said, "Hey, I'm in the hospital, I have a heart attack." So the agents said, "Oh, we're sorry to hear about that, but you know what? Remember, you have a policy. Can you forward your medical documents to me? Let me forward them to Transamerica." And they forwarded it to him, and Transamerica said this falls in the category of critical illness, and they paid him out the sum of $353,519 was what Scott got in check, cash, and of course he had medical insurance, so the medical bill wasn't so much. I think extra 20,000. After a couple of months, he was back. Cut long story short, Scott is back to work in another office because, of course, he lost his job, but he's well off. He had this protection for his family, so he didn't lose his house. In fact, when he got back from the hospital, he upgraded his house and upgraded his cars, paid cash for cars. This is the life that Scott is living now. Put a swimming pool at the back of his house, and he's working, and he still has some change left from that money, and he's back having insurance, because after 5 years again, you can get insurance even if you have a heart attack once you have survived for 5 years going. Do you understand? See, can you imagine what his life would have been if he did not have a life? He could have lost his cars and lost his house, gone to live on welfare or live with a family relative. You think education is expensive, wait until you see how much ignorance costs. And that is what the bane of a lot of us Africans, because we despise information or education. This education will save you from a lot of embarrassment. This is a nurse practitioner. She was earning $200,000 per annum, but had no life insurance. She was diagnosed of cancer and had to resort on GoFundMe from friends in the office to raise money. All they could raise for her was $1,132. She lost her house, she lost her cars, she lost her job, of course, and eventually she passed with nothing left behind. Children that can't go to college, nothing left behind. So I asked the question today, you can't go back and change the beginning, but you can start where you are and change the ending. This is what Louis said. So I want to, wind up on this notion today that, we're going to share my contacts and soon. Please reach out. If you have questions, even I will still reach out to our host, my dear brother Taiwo. He will get across to me to let me know those who have sent comments, and we are ready to help. We're here to help.
Yes,
we don't want your case to be. Can you imagine? Ironically, Scott was earning 50,000. The other lady was earning what? 200,000 per annum. Wow. But look at their so it's not money, it's information that differentiated them.
Thank you so much, sir.
Many people go after make more money to reach. No, it's not how much you make, it's how much you keep, how much you avoid, you don't lose, and knowing the right portfolio to put it. And that's what differentiates Scott. It's not the color of his skin, it is the color of his idea that made it.
Powerful one, sir. Powerful one. Thank you so much, viewers, members, and everyone connected. Please, I want you to drop an emoji in the comment section to appreciate Dr. Fola. Thank you so much. We appreciate you, sir. There's a question, and the question is, I guess the question will be, what likely monthly premium to pay to pay will be for like 250K policy, as in what will be the monthly commitment for example, 250K life insurance policy?
That's a good question. I mean, it's relative to age,
Okay.
relatively to age. Usually, I mean, the younger you are, the cheaper it is. When I started with a 250,000 policy. I'm in my mid, just about 50. So that's about $400 per month
Per
that you
month.
pay. Do you understand? So age, and then male pay more than female. Do you understand? Your sex also
Okay.
implement. Then but for your, depending on where, and also the class they put you, though the class doesn't affect your premium, but the class affects how much they invest in how much the cost of insurance is vis-a-vis the cost of investment. You
Mm.
understand? So there are many components, but we can talk one-on-one, show you some illustrations, and you will know how much you're paying. That's right.
Thank you, sir. Thank you, sir. So please, if you want to get in touch with Doctor, here is his contact. You can reach out to him on. Um, I've shared the link on the comment section, but you can reach out through uh, https, column slash dot
Yeah.
dot.cards slash
Yeah.
doctor uh, underscore Fola. This is the page. Just click on
Yeah.
that link and you
And you can
can,
see my number is there,
his number,
301.
this is his number, his email, and then you can reach out to him. This is his website. You see, website lead dash or iPhone, okay, dash or iPhone attitudes.com. Reach out to him and please make sure, because he's a very busy person, to make sure you are straight to the point. Just mention the Impact Podcast. That, okay, I am from the Impact Podcast and I watch your show and I am super excited to know more about this life insurance policy of a thing. And the other question I'd like to ask, I think we'll bring Doctor again because I know he's a very busy person. We'll bring him again. Is for those that are not resident in America, is there opportunity for them to tap into this investment vehicle?
Yeah, there is. In fact, recently Transamerica instituted a package for those that are not resident, but you have to have a visitor's visa. So you can come in, you have to come to America and get the policy. They'll recommend a hospital or do a blood check while you are here, and you have to sign the policy while you are here in
Yeah.
America. So
Wow.
once you have got that, you can go back to Nigeria, wherever you are, whatever part of the world you are, anywhere. But you have to have a visa that brings you into the United States. And so in between, I mean, maybe you can program like a two weeks to 4 or 1 month, for all that, so that you can do your test and do everything, submit it, and then go. And then your policy is there for you. And you just make sure you're paying your premiums every month and you're good to go. So that's one good thing that Transamerica has done.
Wow, wow, wow. So Baba from Brazil, we have a member from
Okay, wow.
Brazil. I hope and is planning to visit very soon. I hope you can tap into this opportunity, and it is open to Nigerians also. If you have visitors visa, that is B1, B2.
That's
Now
right.
that they are giving 5 years, the idea is whenever you come into the US, in between that time, schedule an online meeting with the doctor, and also Prophet Precious is on this
That's right.
call. Prophet Precious Oluyele is also
That's
a licensed financial professional.
that's
So
right.
you can reach out to them or just reach out to me. I will connect you with these
That's
great
right.
men, and then
That's right.
we'll strike a deal. The purpose of this is to educate our people that, see, Africans are waking up to information in the United States of America. And from
Correct.
all that doctor shared with us, you see that it is possible. You can do it, you can achieve it. So on this note, let us read one more comment. The explanations looks more like a long-term proposition. Can this also
Yes.
cover middle and short-term needs? That's from Esther.
Very good question, and that's quite intelligent. You picked it right, long term. But again, depending on how you fund your IUL, you can have some immediate gains. So these are things we can talk one-on-one to know how. Because in the IUL, there's what we call a component that allows for mass funding to a certain limit, so that you're not charged and you're not taxed. So it puts a cap. If you walk within that cap, you can push your returns on investments faster.
Oh, great. So I hope you got that. Okay. Bosun Ayedun from Ireland. Thank you for joining us. Thank you all the way from Ireland. All right. Okay. What is the chances of a non-US resident of US? The chances is just what doctor just shared with us. The chances is you have to travel down to the United States of America because you need to do a physical test. I think he mentioned it, not that I think, he mentioned it during his presentation that there are medical centers recommended by some of these insurance companies. Abi, if I get you right, sir.
Correct.
That they will ask you to go and do tests. Then you take the result, or they transfer the result. I don't know how they do it. Then you set up your account, and that's the purpose of having his contact, access to his contact. Please reach out. The link is on the comment section. Copy that link. Go to your browser, search cards, that's CADRS /Dr_Fola, and you see his information. Thank you so much for joining us. We appreciate you.
And just to add, sir, the number is a WhatsApp number. If you just add +1 to 301, so you can reach me on WhatsApp also. And if you're a referral from Prophet Precious Oluleye, I will also reach out to him, because we work hand in hand. We're a team, along with Brother Taiwo Balogun. So yeah, we work together.
Thank you, sir. So on this note, we'll be wrapping up, but let us also appreciate Doctor once again. Doctor,
thank you.
I hope to bring you up again and again, because you are
really
loaded.
Look forward to that.
You are
really
loaded.
Look forward to that.
Thank you so much, sir. I appreciate you. Best regards to your lovely wife. In fact, the story you shared with us today at the beginning of this program, it's motivating. Thank you. And like I said, I tap into grace.
Yeah.
Okay, sir. Do have a wonderful evening.
Thank you, viewers.
Afternoon.
Thank you so much
God
for the
bless you.
privilege of
Bye-bye.
time. Thank you for the opportunity.
Yes. So viewers, please take time to watch the replay of this video. If you join us halfway or whenever you join us, please take time. It is something that you can watch again and again. And if you know someone that should also benefit from this information, maybe that person is in the United States of America, wherever they are located. You can see people joining us all the way from Brazil, America, Nigeria, Ireland, UK, wherever they are connected. See, the world is now global with the power of technology, and you can do it. I also want to reach out to my friend who supported us with all these couples, of hoodies branded all the way from New Jersey, shipped to Texas, free of charge. And I want to appreciate him, Pastor Ben Sheyola. Thank you so much. We appreciate you for your support and pray that God will continue to bless you. On this note, I also need to appreciate my friend, Prophet Precious. You are a wonderful friend. He is the one that connected me with Doctor, and I am blessed knowing you. Thank you so much. And on this note, let's call it a day as we wrap up. Do have a wonderful evening. Bye-bye. Bye-bye.